We continue to keep a close watch on Korean assets and the economy amid the political turmoil. Even before President Yoon's brief declaration of martial law, its stocks and currency were already among the worst performers globally. Let's look at the potential impact on Korean assets, exports, and tourism. Avril's back with us, along with Bloomberg Intelligence senior analyst Catherine Lim. Let's start with you, Avril. I mean, we know that the assets have been under a lot of pressure, underperformance pretty much.
They have. They are among the worst performers in the world this year, whether you're talking about stocks or the currency. But they have stabilized a little bit from the onslaught on Tuesday, late Tuesday night, especially for the Korean won. I think the question then becomes, between the Korean won and the stock market, which would perform more poorly? And for that, our stocks team have actually done some analysis. They've flipped and looked back at the history books to the period in 2016-2017, where we saw a similar episode in South Korea, where politicians then were also seeking the impeachment of the president at that time, then President Park Geun-hye. That was something that dragged on for months as well, before getting approval from the Constitutional Court. And over that period, what was interesting was how stocks managed to clock gains. I think it was about 3%, but the Korean won actually came down about 5%. So this suggests that we could see among the two, the worst performer being the Korean won. And don't forget, this time around, the growth backdrop is a lot more questionable, right? Because growth in South Korea has been tepid. We've also seen about $14 billion being pulled out of South Korea's stock markets in the past couple of months. And that is something that will have knock-on effects for the Korean won, given the stock market outflows.
We're expecting volatility in the Korean won. It doesn't change the fact as well that it is the worst performing currency in Asia this year, down about 8% versus the USD. That must be great for travelers, for tourism. I mean, I still look at the currency before I decide where to go.
Yeah, absolutely, Haslinda. If you actually look at Chinese travelers going into Korea, they're up like 160% on a year-on-year basis, up for the first 10 months of 2014, of 2024, really. And then, if you look at it itself, the numbers were actually still going pretty strong, into the early Novembers. I'm still waiting for the numbers to be out. And then we now have this martial law scare, and it's really bringing a lot of the question mark as to how much disruption we're going to get into the year-end holidays. And the last thing that anyone wants during the holiday is to have public transport disruption. We've heard about nationwide labor strikes being called for, in the lead up into the potential impeachment. So a lot of question marks. And I do have Chinese friends around me who's like really wondering whether they should continue their holidays in South Korea.
And speaking of strikes, we know that, Korea railway workers will be going on strike starting today. That adds to that labor union strike that we're already seeing in the country. And the other thing is, people talk about the upside, right? When it comes to the markets, there's potential opportunities to buy. If you take a look, Avril, at, the themes of supply chain disruptions, chips, perhaps buy the dip.
Yeah, I think that is something that investors are more seriously considering. You think about how the political developments in Korea have kind of garnered all this global attention, right? What is that going to mean for longer-term investors? Maybe they take a closer look at the South Korean markets, the longer-term investors that are looking for value. And you look at valuations in South Korea, they are really cheap. I think on the Kospi, it's trading something like 8 times forward earnings. It's still really underperforming if you compare it to the region's benchmark, the MSCI Asia Pacific. But there's also a sense that it is cheap for good reason. I mean, you know how the Value Up initiative, that's a key ambitious plan from the current government, that might be put on the back burner for now. Those plans might be cast in doubt. What is this going to mean for those efforts to unlock value for shareholders? It's interesting that we have the likes of JP Morgan today saying that, the bank shares that are bearing the brunt of those concerns, what is this going to mean for the Value Up initiative? They're potentially a buying opportunity because they are going to be continuing to try and unlock that value for shareholders. But it's not just about the Value Up initiative. You also look at some of these other concerns surrounding Korea stocks, notably the so-called Korea discount, which of course, as the name suggests, is with Korea trading at a discount to peers. The idea that there's so much influence from the Korean chaebols that they actually seem to want cheaper stock prices because to avoid inheritance taxes. So these are risks for the market, even though potentially we might see some bottom fishing.
And Catherine, speaking of buying, the Chinese actually can buy Korean products online, or they can also buy at home. Increasingly, we're getting those products in the respective markets. That in itself is impacting, perhaps, the appetite to travel to Korea during such difficult times.
Absolutely, Haslinda. If you look at it, shopping has gone global thanks to e-commerce platforms,
Oh,
etc.
don't we know it?
Absolutely. We're just over Black Friday, Cyber Monday, so that's that. And really, cosmetics. If you actually look, take a step back. I'm going to bring in Shiseido because just earlier this week they were already telling us that there's going to be headwinds ahead of that. I think the Korean cosmetics brands, Amore Pacific, LG Household, they're not alone too, because you're talking about a big market that they were eyeing, like China slowing down, and now we've got travel retail being now a question mark as to the impact of tourism in South Korea, notwithstanding, of course, e-commerce. That's bringing also a lot of the, more niche products into the market. And I'm just going to bring in that we've got Chinese cosmetics brand Mao Geping going public next week. So, that's another niche brand to actually watch out for.
You got to also wonder which brands in particular, which companies in particular will be most impacted by the lack of, Chinese tourists going to Korea.
Well, it is still the in-house, Korean brands, and Amore Pacific has a whole suite of labels under them, from Suwasu right down to Laneige, and even the top-end Amore Pacific brands. So they are the ones with popular brands, and thanks to the K-pop endorsements that we've actually seen by this company. So I think they're going to be hit the hardest. But of course, over the last couple of years since COVID, they've also been diversifying into digital channels. So we'll have to see whether the drag from this ongoing crisis will actually have as much as an impact on them. I kind of tend to think that it's going to be a little softer, but we'll see.
Avril, just very quickly, the credit outlook for Korea, is that at risk?
We have the likes of S&P saying that investors might be a bit more cautious when they're looking at the credit ratings for the country, but they don't think that this latest political turmoil is going to prompt a ratings change. But that being said, if you look at how South Korea's credits and the credit default swap is, there is some expectation that there will be a tightening of the spread between South Korea and China, because you think about, you were alluding to this a short while ago, China stimulus, how that might boost the economy, improve the outlook for 2025. So maybe that could prompt a tightening of the spreads between Korea and China's credit default swaps. That's certainly something that markets are not fully pricing in just yet.
So it is a maybe. Bloomberg's Avril Hong and Bloomberg Intelligence Senior Analyst Catherine Lim, thank you.